CPI. So, what is CPI? If you want to get technical about it, the way Webster, or in this case, the U.S. Bureau of Labor Statistics, would define it is a measure of the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services. I know that sounds like Greek. We're going to break it down a little bit more here, but it's important to note, real quick, the market basket for CPI, the group of stuff that it's tracking, it only changes every couple of years. That's a very important distinction from PCE. PCE is the other thing you'll see central banks use as a measure of inflation, personal consumption expenditure. Personal consumption expenditure, say that 5 times fast, considers urban and rural consumers, coupled with third-party expenditures bought on behalf of those two parties. With PCE, the market basket changes every couple of months. CPI, it changes every couple of years. Forgive me, PCE actually changes on a monthly basis. But you get where I'm going with this. There's a distinct difference there. So PCE is often going to be a little bit more of a short-term thing. CPI is going to be a bit more of a long-term thing. But as you can see in this chart that I have here, again, something pulled from the Bureau of Labor Statistics, CPI has moved kind of heads and shoulders above PCE in terms of how much of a percentage change we're seeing. CPI is getting a little bit more out of control than PCE. So sometimes you'll see central banks refer to one over the other, depending upon if they're talking about a short-term outlook or a long-term outlook. Obviously, PCE will be the sister video we do to this one later this week. Moving from there, this is the group of stuff that I was talking about before. The group of stuff is usually very similar for CPI and for PCE, but we're just going to talk about CPI today. The biggest one here, obviously, is going to be housing. I don't think people are spending 2,000 quid or dollars or yen on clothing or airfare. If you are, God bless you. Please fly me out somewhere. I'll really appreciate it. But this is the core of CPI. This is the stuff that every Bureau of Labor Statistics or governing body that looks at labor and where money is flowing for the average person, this is what we're paying attention to. This is what the Federal Reserve, the Bank of England, the Bank of Japan, the Eurozone, this is what everybody's going to be paying attention to. A really good example of something that is a part of that group that got a little bit out of control and may have caused CPI to get a bit higher than it once was, is eggs. Eggs here in the States went absolutely ballistic. There were jokes about eggs being as valuable as gold. And as you notice, I'm not laughing because eggs for a moment felt like they were as valuable as gold. Couldn't find them anywhere, and they were super expensive. As you can see here, eggs are super stable. I mean, it's produce. Eggs are great, but it's not, it's not something super crazy. It's not like it's honey buns or anything. It goes up a little bit towards the end of 2008, drops down stable again. 2016 gets a little bit more aggressive. We see lows that we hadn't seen in 10 years towards 2020, and then all of a sudden we get a 3x price increase. Absolutely insane. Stuff like this getting out of control is what contributes to CPI and what causes inflation to rise. CPI is a reflection of inflation. At its core, though, what we're looking at really is basic macroeconomics. This chart here is telling you everything you need to know about the price of these goods and services in a vacuum. There are some things that change, but for now, let's take a look at it in its simplest form. Every product, good, or service has a price and a certain quantity available of it. Supply and demand. In this chart that you see here, right now, supply and demand are at equilibrium. So the price that you're getting is a fair price, and the quantity that you have available of it is a fair quantity. Well, what happens when something like demand goes ballistic? Demand goes ballistic. Well, price has to be adjusted. You see, supply has not changed. Demand has changed, though. So people are producing more to try to keep up with, well, they're trying to start producing more to try to keep up, and the price ends up going up. Conversely, same thing happens when supply dwindles. What happened with eggs? It was a real supply chain issue. So supply went ballistic, you had a lot less eggs, and so the price went up because demand was incredibly high. Now, that's just one particular product, right? Eggs aren't really that exciting. So let me try to break it down for you another way in terms of how this affects central banks, because they'll see this stuff start to happen. They'll see the egg prices go ballistics. They'll see CPI get to 10% or what have you. And then they'll start doing something. They'll cut rates. What does it look like when they cut rates? This is Disney World in 2019, okay? It looks as you would expect. Kids love Disney World, adults love Disney World. We don't judge here at TradeDelicious. You love what you love, right? This is beautiful. You have a ton of people all over the place spending a ton of money. This is how economies begin to flourish. Then all of a sudden, inflation gets out of hand on a couple of items like eggs, like gas. So a central bank decides to cut rates. To raise rates, not cut rates, forgive me. They decide to raise rates, making money more expensive in terms of loans. If you have a variable mortgage, for example, your mortgage prices can go up. If you decide to get a new car loan, that car loan will be more expensive than it was just a month or a year prior. If you decide to get a personal loan, that's more expensive, and that applies to businesses as well. We'll get to that in a second. But all of that price range change, all of those loans and those interest rates getting more expensive, turn Disney World from this to this. This is when things open right back up after the pandemic. Believe it or not, for a moment, we did not see people flocking back as aggressively as we thought people would. A part of that was because, people were still a little nervous about the pandemic. But another part of it was people just didn't have as much in the way of money. That's what happens when inflation gets out of control. The prices of things go up aggressively, but people's wages oftentimes takes a little bit of time for them to catch up. So not as many people are seeing the mouse. The same family that was planning this trip in June of insert year here, once rates go up, they decide, maybe we should push that trip off. Maybe we should do something the year after. And how does that affect Disney World? Disney World now has less money. They still have billions of dollars, don't get me wrong. Boo-hoo, it's tough to have $4 billion instead of $5 billion. But they have less money nevertheless. So how are they going to respond? They have a fiduciary responsibility to their shareholders. Rates went up, money became more expensive to come by. They get less people coming into their parks, buying their services, buying Disney Plus, buying ESPN. So what do? They go and they slash jobs. And this becomes a positive feedback loop where you have the average consumer cutting back, then you have Disney cutting back, and this takes the job away from the average consumer. Is it starting to make sense? CPI is really just a positive feedback loop of everyone having, first, less money, two, less job opportunities, and three, less money from those less job opportunities to buy goods and services that feed into the economy. This is why CPI is such an important event that every central bank is going to be paying very close attention to when it comes to the fight against inflation. Thank you guys so much. That really is all that she wrote on inflation. Yet any comments, questions, concerns, jokes, heckling's very welcome here. Please feel free to throw it down in the comments below. We love to engage with you guys, and we can't tell you how much we appreciate your time and watching our videos. This has been Aaron Collier with TradeDelicious. Thank you so much for your time. Hope you guys have an excellent rest of your morning, afternoon, or night, depending on when you're seeing this. But thank you. I'll see you.